Welcome back to the Taxtron Support YouTube channel. Today, we are covering an important topic, the Allowable Business Investment Loss, or ABL. If you've invested in a small business that didn't work out, this is something you will want to know. So, what exactly is ABL? An allowable business investment loss is a special type of capital loss that occurs when an investment in a small business fails. Normally, capital losses can only offset capital gains, but ABL can be deducted against any type of income, like employment or business income, helping reduce your overall tax bill. To claim ABL, a few conditions must be met. The loss must come from shares or debt in a small business corporation. The corporation must be a Canadian-controlled private corporation, CCPC. And it must use 90% of its assets in an active business in Canada. You can claim 50% of the total loss. So, if your loss is $50,000, the allowable portion is $25,000. If you don't have enough income to offset the loss, you can carry back the unused portion for 3 years or carry it forward for 10 years. After 10 years, it becomes a net capital loss, only applicable to future capital gains. You may also be deemed to have disposed of shares or debt at zero value if the business has gone bankrupt, is insolvent and under a winding-up order, or if the business no longer carries on and its shares have no value. Let's take an example. Sarah invested $80,000 in a Canadian-controlled private corporation, Technova Incorporated. After 3 years, the company went bankrupt, and Sarah lost her entire investment. Since Technova was a small business corporation, Sarah's $80,000 loss qualifies as an ABL, meaning she can claim 50%, or $40,000, against her income. Now, let's enter it in the tax return. First, log into Taxtron Web and navigate to your tax return. Go to the T1 Clients section and either select an existing client or create a new return. Ensure that the Personal Information section under Identification is completed accurately, then click Next. Next, we will report the T4 for Alex, which will help you better understand this example with some income values. Navigate to the Income tab and locate the Profile tab. You will need to answer yes to the question, did you work in 2023? Then, check the box for T4. On the next page, you will land on the T4 section. Enter $45,800 in box 14 and $3,200 for tax deducted in box 22. Complete the rest of the T4 as shown in the video. As you can see, this person owes $2,917.84. Now, click Next and go to the Deductions tab. Click on Losses, and under that, you will find the ABL form. Enter 0 in the Proceeds of Disposition field and $80,000 in the Adjusted Cost Base field. And that's it for ABL. We will assume the return is already completed, and now we will verify these line numbers on the T1 General. Let's navigate to Review and File and download the record-keeping copy. If you scroll down to the T1 General, you will see the gross business investment loss of $80,000 on line 21699, and your allowable deduction of $40,000 will appear on line 21700. As discussed earlier, this deduction is not limited to offsetting capital gains. It can also be applied against any type of income. In Sarah's case, her income before the ABL deduction was $90,000, including her T4 income. By applying the $40,000 ABL deduction, her taxable income is reduced to $50,000, significantly lowering her tax burden for the year. It's important to note that claiming an ABL not only helps offset immediate tax liabilities, but if Sarah is unable to use the full deduction in the current year, she can carry forward the unused portion for future years or even carry it back up to 3 years to adjust previous tax returns. And that's all for today's video. We've covered how to claim an ABL and how it impacts your overall taxable income. I hope you found this explanation helpful. Thanks for watching, and see you next time.